Establishment automakers have been shielded from competition by a wall of barriers for the better part of a century. Any startup that wanted to get into the business had to hire armies of engineers, invest vast sums of money, and develop a statewide network of stores in order to succeed. Some attempted, but only a few made it to the market. This year has seen an explosion in the number of startups, which has not been seen since the early days of the auto sector. Startups are able to raise enormous sums of money as a result of the introduction of special purpose acquisition companies. In today's video, we'll witness Lucid Motors transition from startup to becoming a well-established electric vehicle manufacturer, as we follow the company's valuation over time from its merger to its current valuation by industry analysts. Stay tuned. Welcome back to New Vehicle Media, your go-to channel for EV stock. Quick reminder that subscribing is free and liking the video helps YouTube suggest similar content. Comments are loved and featured in upcoming videos. Lucid's stock price fell as much as 19% earlier this month to $16.12, its lowest level since the company's merger with CCIV completed in late July 2021. This was in line with earlier projections of short-term volatility due to the expected influx of shares when the PIPE lockup period expired on September 1st. As anticipated, the vast majority of institutional investors who had made contributions through PIPE, including Lucid's single largest stakeholder, the Saudi Arabia Public Investment Fund, had retained their respective stakes in the company. Soon after, the stock recovered to the $20 mark thanks to a flurry of buying activities in the following week. When Lucid's EPA confirmation was announced as having reached an unbelievable milestone, the share increased by more than 20% in the same week. And during mid-September, when the majority of the financial markets were in the red due to fears about the danger of contagion from China Evergrande Group's increasing debt crisis, Lucid shares remained resilient. The stock has gained more than 49% since the beginning of September, and it is now trading at roughly $26.61 per share at the time of writing. Lucid's remarkable outperformance has also caught the attention of Wall Street analysts, with many of them giving the company a buy rating based on factors such as innovative technology, attractive product, compelling brand, clean sheet production method, and strong management. The production preview at Lucid's Arizona manufacturing facility on September 27, 2021 was another positive day for the company, with the stock surging more than 5% at open trading. The upcoming deliveries of the Lucid Air are likely to serve as significant catalysts in the stock's subsequent surge. Investor sentiment about Lucid remains positive, with a revised 12-month price objective of $29.76, up from the previous target of $26.13. The correction takes into account the recent stabilization of the post-lockup sell-off, as well as positive market expectations for substantial catalysts in the near future. From EV startup to EV maker. Following the merger, the stock's market worth was predicted to jump from $6.9 billion to over $40 billion. After the rumor spread, investors began to wonder if the high valuation, which is usually given to more established, revenue-generating EV manufacturers like NIO, would be sustainable for the EV startup. Aside from the PIPE offer, the stock price was also pressured by Lucid's warrants, as we highlighted in one of our previous videos. A provision in Lucid's prospectus stated that unexercised warrants would be ruled invalid if Lucid traded above $18 for 20 consecutive trading days. Because Lucid's stock price remained over $20 in the month following the merger's closure, any warrants that had not yet been exercised would have expired at the end of August 2021. This sparked fears of a late-night inflow of shares, further depressing the stock's price. However, it was predicted that any short-term share price dilution due to the two scenarios of PIPE offer and warrants would be minor and would last a short time. It was expected because the Saudi Arabia PIF owns the majority of the PIPE and intends to leverage the strategic collaboration to drive broader EV adoption in Saudi Arabia. That made any price dilution from the post-lockup PIPE sell-off unlikely to be significant. To sum up, Lucid expected to raise $1 billion in cash through the warrants giving them more leeway in future capital allocations for growth efforts. Due to long-term growth realization, any price implications from warrant conversion were compensated, and the LCID ticker remained stable most of the time. That's why, on September 1, 2021, Lucid's price dropped the day after the PIPE lockup expired. Shares plunged as much as 19%, bringing them to a low of $16 before recovering intraday losses to close at $17.79. Strong buying, on the other hand, swiftly reversed the week's losses, resulting in gains of close to 10%. Investors' confidence in Lucid's long-term growth prospects was evident in the stock's buy action. The price bounce following the expiry of the lockup showed that the market feels Lucid is worthy of being moved from a $6 billion pre-revenue startup to a $40 billion EV maker, despite the fact that Lucid has yet to begin customer deliveries. Revised valuation of LCID. Analysts have raised their 12-month price target from $26.13 to $29.76, citing recent developments, such as the stabilization of the stock's volatility following the most recent post-lockup sell-off and formal validation of the company's record-breaking range capability by the EPA. Based on the most recent traded price of $26.61 at the time of writing, this represents an upside potential of more than 12% for the stock. Using the expected financial information assessed in conjunction with the discounted cash flow analysis over a 10-year discrete period, this expected price target of $29.76 per share was established. Because of Lucid's anticipated transition from a pre-revenue startup to a legitimate revenue-generating electric vehicle manufacturer before the end of the year 2021, the EBITDA multiple used in valuation has been increased to 37 times. The weighted average cost of capital used to discount Lucid's projected free cash flows has been reduced from 12.9% to 9.8%. Lucid's risk profile has been adjusted to reflect lower volatility as a result of the PIPE-related sell-offs and increased liquidity in the company's capital structure as a result of the warrant conversions. That is how analysts arrived at a price of $29.76 per share for the stock. Concluding it all together, visitors to Lucid's Arizona manufacturing facility were welcomed on September 27th as part of the company's production preview week at AMP1, and the stock price of Lucid rose as a result of this event the following day. Several details about Lucid's current manufacturing development on the Air cars were revealed at the event. The opportunity to test drive the Lucid Air was granted to invited visitors, which is likely to have added extra credibility to Motor Trend's excellent evaluation of the car, as well as boosting investors' confidence in the stock's upside potential. And looking ahead, as the Lucid Air sedans begin to hit the roads, the stock is projected to challenge for newer highs. To date, Lucid has apparently secured more than 10,000 reservations. It is expected that Lucid will convert some of these reservations into revenue by delivering up to 577 vehicles by the end of this year, allowing it to transition from being a concept stage startup to becoming a revenue-generating EV manufacturer. Since going public, Lucid has established itself as one of the most notable EV manufacturers among its SPAC counterparts that have gone public in the last year and a half. Now that independent car valuations and the EPA range certifications are complete, Lucid appears to be on track to begin customer deliveries. With analysts' good lookout of Lucid's long-term growth strategies, which include global expansion dreams and ambitions, an increase in its EV lineup, diversification of its income streams, and technological advancements, the EV maker is well positioned to capitalize on the increased opportunities ahead and drive greater valuations in the foreseeable future. I'm keen to know what you think. Since its merger, do you believe Lucid has grown in maturity? Please share your thoughts in the comments section. RV is holding 500 shares of the 500-mile manufacturer Lucid Motors. He will not sell any shares till the price reaches $500. That is quite assured in LCID, and we wish him the best of luck as always. The present trend is also in RV's favor at the moment. This should wrap things up for today. Keep in mind that subscribing is still free and liking helps YouTube recognize your preferences. Thanks for taking the time to watch, and I look forward to seeing you in the next one.